Well, hello there. Another trading day in the books on today, June 5th, 2024. And I have a trade recap for you on the SPY ETF. You see SPY on your screen on the day time frame. That simply means each candlestick you see represents 1 day of price data. On May 31st, I have a signal for potential trade entry to the upside. And that signal is an engulfing candle. Why a trade signal to the upside? You see this downtrend here, which I consider a mini downtrend, a mini because it's comprised of only about 5 days. If you zoom out, SPY has a macro uptrend. That means look at the week, look at the month, or even the year. You'll see that SPY has been moving up. So that is more impactful to me than 5 days of downward movement. So this signal is for the upside, but I need more than a signal. I need support for my specific strategy. I've got my signal and I have support that's comprised of 50% of this mini downtrend. And then I determined my confirmation of my upside move and also my entry point. That entry point would be if price opened on the next trading day between the 50% level of my signal and the high of my signal. So that would be between approximately $522.93 and $527.50. So also, my target or my first target would be the high of this large candle here that you see on your screen. That's approximately $533.07. Dana, why is that your first target? Well, it's based upon the thesis that price tends to retest a previous high. That's why it's the first target. So let's see what happened. On the next trading day here, which is June the 3rd, price opened above actually the high here, but it retraced based upon the gap fill strategy and gap fill theory. Take a look at my videos if you're unfamiliar with the gap fill. When price retraced to this level, I entered my first position, which is a 529 call with the expiration date of June the 12th, 2024 at approximately $410 per contract. I added on to my position when price continued to retrace to my 50% level, which is also my stop loss level. I added on at approximately $275 per contract. So now I'm in at an average of $343. So why are these levels so important? When you do your research the night before, when the market is closed, you can back test your underlying asset. Underlying asset here is SPY. So I knew approximately how it tends to move on average, that it will retest 50% of my signal candle. That's why I was comfortable based upon my rules, adding on more contracts, and now I'm in at a better price. So let's keep going and see what happened. The next trading day, which was June the 4th, you see that price is still hanging out here above our stop loss level. And now we get to today, Wednesday, June the 5th, and we reached our first target. Price actually met and surpassed that $533.07 mark. So at this point, these contracts that I entered were selling for $735. So I'm out at least partially of this position. You can do that math. That is over 114% return on investment for a trade that you held for about 3 days. The takeaway here, again, all of this is before taxes and fees. The takeaway here is do your research the night before. You need not watch the charts all day for minor price fluctuations. You can identify your trades the night before, your signal, your confirmation, and your targets. Just have a strategy and have rules and have the restraint to stick to your rules. Questions? Let me know. Otherwise, we will chat again soon. Goodbye.